Welcome back, everyone. I hope you all enjoyed the previous video on fair value gaps. I feel like that was a bit of my best work, even though I'm only 4 videos in. But yeah, I'm still cooking up a few more videos for you, for the people that are trying to get into trading, just to simplify and make a lot of the stuff easier. Because obviously a lot of the stuff that you see on the internet, most of it's garbage. And some of it, when people explain it, it's not really made for beginners, if that makes sense. So people that don't understand it, people just complicate it, and it just gets a bit confusing. So my job and my videos are just here to just dial it down a bit and just help a lot of the people. Because a lot of people ask me how do I get into trading and this and that, and I give them links to other people's channels. So I just thought to myself, you know what, I might as well just make a channel and just direct people to that, just to make it easier for the people. So yeah, man, hope you're all really enjoying it. Without further ado, let's crack on to the video. So in this video, we're going to be talking about order blocks. So an order block is another PD array, like a fair value gap. So they're both PD arrays, and a PD array is basically, it's a tool in the market where price tends to bounce off of these areas. The areas in the market where price tends to bounce off of and then move in its intended direction or reverse from a certain part in the market. So yeah, today's PD array, we're going to be talking about an order block. So what an order block is basically, in the name, it's a block. So if we start from here, we have price is printing, we form a high and then move lower. So that move lower forms this high. Price then moves into an important area of the market or an important level, taking out the high that was formed with this move lower, and then price displaces to the downside, so it moves lower with speed. That move lower to the downside forms this order block. So this order block is the last up candle before the down move. So after that down move was formed, price then moves back in to the order block, then continues in its intended direction. So it's just when an order block is just formed when price is displaced lower with speed. So that's just showing you that, okay, the market is basically showing its hand. It's showing that it wants to move lower. So it just needs that move into that order block to get an entry and to move lower. And on the flip side, in a buy market, it's the same thing. Got price printing, forms a low with that move higher. Price moves into an important area or a level in the market, sweeping that low. Price then shows its hand, or the market then shows its hand with a huge move to the upside. That huge move to the upside is what forms the order block. So on the flip side, it's the last down candle before the huge move up. Price then retraces and retests the order block and then moves in its intended direction to the upside. Now, I'm shouting bad though. Oh my gosh. Now I'm gonna show you what an order block looks like on a live chart, or not a live chart, but in an actual charting scenario. So if we start printing forward, so as you can see here, we have a high. So a high is formed when the previous candle here, when this high is lower than this high, and then the following candle's low is lower than the actual high. So then you can see there, it's a high. So that's a high formed. So price took out that high and it took out this high as well. So what I'm going to do is I'll just draw a high here. So that represents a sweep. So there's a few, I put a few pound signs there just to represent that price has swept a high. So like I said in the previous diagram, now we look for a huge displacement to the downside, just to represent, or just to show, sorry, that the market is tipping in our favor, or tipping in the direction we want the market to go into. So if we got a sweep higher, we're looking for a displacement lower to the downside. So if we print that, so we've got a displacement lower. So this was the up candle before the down move. So price is displaced lower. So draw this, let me get a line. So we'll label that as an order block. Just do it like that. So I've done it as an OB order block. So price is tapped back into that. So we should see a move lower to the downside. So price has tested it again, and we get a move lower. So price is printing again. So as you can see here again, so we have this candle's high is lower than this high, and then this candle's high is lower than this high as well. So when price moved higher, price has swept that high. So if we do another liquidity sweep there, so that's just to show again that price has swept that high. And then if we get, so with that up candle that swept that high, if we get a displacement to the downside closing below this candle's open, then that would be another order block formed. So play it again. So we get a displacement lower. I draw the order block there. So in order to look for short positions, I would want to see price move into this area and then move off to the downside. So if we print the candles again, so we get a push in, get a push into there, and then we should see price just fall to the downside. There we go. So now that you know what an order block looks like, and now that you've seen it in a charting scenario, now we're gonna dive deeper into the characteristics of an order block. So with this up close candle with the move lower, this is called a bearish order block. So in every order block there's a midpoint of that block, and that midpoint is called the mean threshold. So in some cases, with that move lower, price could come back into the order block and retest that area, so the mean threshold, and then make its move lower. Some people they could take, when price retraces back into the order block, some people take their short positions or sells from here and they put their stop losses above the mean threshold, because they know that sometimes price could most likely just tap into that mean threshold and move off to the downside with their stop losses protected. What I don't want to see when it comes to the mean threshold is, just get rid of that. I wouldn't mind seeing this, so price wicking that high and moving lower, but I wouldn't want to see price disrespect the mean threshold. So once price does this and closes above the mean threshold, I would no longer entertain this market, and I would wait for price to close back below it and move off it. So I wouldn't want to see that or a close fully above this high, because then that means that the market would most likely tap back into the mean threshold and move higher, and then the bias of the whole trade just changes to bullish instead of bearish. Now that I've explained to you what the mean threshold of an order block is, now I'm going to show you a few examples on the charts. So on the chart and scenario. So here we got the Euro USD. So yeah, just print a couple candles, prints. So here we have a 4-hour fair value gap. So this could be this is a higher time frame. This would be a higher time frame level or important level that we want price to trade into. So once price trades into that, we'll move on to the lower time frames to try and get an entry. So let me go to the lower time frames now. So if we go into the 15-minute time frame now. So here's our 4-hour gap that we want to trade into, and then see if we can get a possible entry to the downside. So we're printing now, printing. So what we would want to see is a high form, price sweep that high, and then get a displacement lower to form an order block where we'll get our sell entries. So we're just looking for a huge displacement lower. So price has just accumulated. Multiple highs formed here. A possible move higher. So if we label this as, if I label this as a sweep, and see what we get from there. So price is still trading. So price swept even higher. So that's another high formed. So this candle's high is lower than this high, and this candle's high is lower than that high. So that's another high formed. So we'll mark that out as another sweep. I feel like this is the manipulation because it's pushed price higher at speed to trick a lot of people thinking that it's a buy. So those buyers will put their stops below these areas, and then price displaces lower, and then displaces lower again. So after that sweep, we have a close below. So we have these two up candles. So these two consecutive up candles could be classed as an order block as well, as long as they're consecutive. So as long as it's a sequence. So we don't want to see something like this: green, then a down candle, and then another one. That won't be classed as an up candle because it's not consecutive. It's not a sequence. This is consecutive, so there's no down candles in between here. So this is classed as one full order block. Let me do a box. So we've got this huge candle. Do it at 15-minute. So on the 15-minute time frame. So we've got a 15-minute order block. Price is closed below it. We could put in, just do that as a sell position. I could put my stop loss above here. I could put it above the mean threshold. So let me put it above here just to protect it. And then we could put our take profit levels to the downside here. It's just a quick trade and see what that does for us. So price is now rejecting off of the order block, moving to the downside. If you could see here, we have another, so this candle's high is higher than, no, sorry, this candle's high is lower than this candle's high, and this down candle's high is lower than that high here. So you could mark that out as another sweep before the displacement lower. So that displacement lower, so we've got another set of consecutive candles to the upside, forming another order block. So that's another 15-minute order block. Price is displaced below it. So we want to look for a retest of that order block to possibly get another sell entry to the downside. So we've got a test of that order block again. We could enter another sell position, and then it's basically times our stop loss again. So that's 2 entries. That's why it's gone up to 2,000. So that's 2 entries here because of the retest of that 15-minute order block. Get price to move lower, and then it's just displaced with speed to our take profit level, and it's taken us out of the trade. Obviously, in a live scenario, it would be a lot more than that, but it's just an example. So yeah, on the 4-hour time frame, look how price has respected that 4-hour fair value gap as well. It didn't close above it, so we've got to move higher. It's rejected off it, and it's moved lower to the downside. So yeah, those are order blocks. Now we're getting to the juicy parts of the video. So now that you know what a mean threshold is of an order block, now I'm going to show you a few charting scenarios of what they look like in the actual chart. So here we have an order block. Not every order block has to sweep a previous high before a move lower, especially on higher time frames as well. So here we have an up candle before a huge move to the downside, so a down candle that forms an order block where price is currently retesting it now. So we've got a move higher, and then it's rejected it. It's completely respected the whole order block. So here we've got the midpoint. Hang on, let me get rid of this. So here we've got the midpoint of the order block, which is the mean threshold, like I've explained. It's completely respected that. So now if we move lower to the 4-hour time frame, look how even on the 4-hour price is respected that the bodies have closed below it. So in trading they say the wicks do the damage, so the wicks done the damage, but the bodies tell the story. So it's closed below it. The market has no intention of moving higher. It's closed below it. It's completely respected it. So now we've got another displacement to the downside. We've got a close below a 4-hour order block now. So that's the 4-hour up candle before the move lower. So we can draw another order block here, but label it as, so that's a 4-hour order block. So I'd want to see price move into here and then possibly move to the downside. Here we have the mean threshold again, so that's the halfway point of that up candle, and let's see if we respect that and move to the downside. So we've rejected off it once, rejected off it twice, and moved lower. And then that's that. So we've got to move lower. The replay tool is just finished now. I didn't even know it was going to finish. So yeah. So as you can see here, we've got a test, a first test of it, got a second test, and we've got a third test, and then price moved lower to the downside. So look how the price was respecting it. It was closing below it. The wick's done the damage, but the body's telling the story. It's telling you that it doesn't want to go. It doesn't have no reason to move back up here. So it's moved lower again. It's formed another order. No, I wouldn't class this as an order block series of candles. So it hasn't closed below this area here. The price has moved higher. It's tested it again. It's displaced lower. You would class this as an order block. So we have another order block here going into next week. So price could move into here, test this order block again, and then move lower to the downside and continue with where the market wants to go. Finally, at the end of the video, of our last topic, and this is going to be about order block continuations. So when we get to certain areas of the market, we look for smart money reversals. So we're going to look at a bearish market for this example. So when price is moving higher to the upside, we get a smart money reversal, and here is where I like to look for order blocks to enter the market. So after we get a smart money reversal, I like to see an order block form off of another order block. So we got an up candle here with a bearish move lower. We've got a retest of that order block forming another order block, and then here is where I would get the extra confirmation to then entertain the market and enter my sell positions. So I would like to see something like that. So another move into that bearish order block, and then we get a move lower. So we'd get our entry here at the order block. We'd put our stop loss just above the mean threshold, or for extra safety, we could put it above that candle's high. So just to protect it, and then we target wherever we want to target. Now, continuing with order block continuations, no pun intended, we have the fair value gap. So another PD area I'd love to see an order block form off of is a fair value gap. So like I said before, we have price moving higher into an important area, forming a smart money reversal. Then we get a displacement lower. We don't care about this up close candle because we're not looking for order blocks. We're looking for a fair value gap. So in the previous video, on the fair value gap video, we have this down candle's low with this up candle's high. We have the move lower, which has formed a gap. Price has completely rebalanced that fair value gap, and then displaced lower, forming that fair value gap where again I would like to see price move into it, and then we'll take our sell positions from there and target where we need to target. And just like before, we could put our stop loss above the mean threshold of the order block, which is up here, to protect our sell positions, or we could put our stop losses above this candle's high for extra protection as well. Because once this area has been rebalanced, price isn't gonna, once it's been rebalanced and displaces lower, it wouldn't make sense for the market algorithm to move higher and reach for that area again. It's just not healthy for the market. So the last array or important level for the order block continuations topic our old highs and old lows. So for this example, we're going to be targeting old highs because we're in a sell market, so price is moving lower. So we get price moving higher here. We get a smart money reversal with 2 down candles displacing to the downside. We're going to ignore this green candle here because we're not looking for an order block, and we're going to ignore this fair value gap here because we're not looking for fair value gaps. We're looking for old highs. So this candle here, this candle's high is lower than this candle's high, and then the next candle's high is lower than this candle's high as well. So that forms a high, and then we get price moving to the upside to take out the highs. So that's a liquidity sweep or a turtle soup or whatever you want to call it, and then price then moves lower to the downside. Then we get an order block formed. So with this move lower, this candle, this up candle is what we want to look for now. So this is the order block continuation, so it's continued from the old high. So it took out the old high, displaced lower, and we got the order block formed. What we'd want to see now is price move back into that order block and then move to the downside, where we would look to take our short positions again. Could put our stop loss above, so I said above the mean threshold of this order block. So we can put it here. So we wouldn't expect price to break through that mean threshold, because if it did break through that mean threshold, remember what I said, a close above the mean threshold, I wouldn't entertain it anymore. So we would likely get stopped out. So we want to put our stop loss above there, or for extra protection, could put our stop loss above there, because price could reach the main threshold. It could extend past it and spike. Remember I said spike, not close. So we could get a spike above here, and then a move to the downside. So yeah, we'll put our stop loss above here and then trade the market lower to our intended targets. So now that we've gotten order block continuation explanations out of the way, now I'm going to show you a few charting scenarios and charting examples. So here we have the Euro USD 4-hour time frame. So what we're going to look for now is a smart money reversal. So that's a sweep of an old high and then a displacement lower. So we have a sweep. This candle has swept this high. So I'm going to draw this so we can identify where the sweep was. So I've got a buy side liquidity sweep. So now we're going to look for displacement to the downside, which we have here. So now, what can you see? We can see an order block here. So let me draw that out. We have price is formed. So we've got an order block here with, oh my goodness, sorry. So we have an order block with a 4-hour fair value gap. So we got a gap here. So we've got this candle's low with this candle's high with this huge black candle. Then there's a gap in between there. So we would want to see price retrace back into here and then move to the downside. So price is testing the 4-hour fair value gap. Then we get a move lower. So it never got to the order block, but it tapped into the fair value gap, as you can see, and then it moved to the downside. And we keep going. So now, so look how accurate this is. So now we got to move into the order block. So this order block here, we've got to move into the order block with the consequent encroachment of the 4-hour fair value gap. Plus, we got a sweep of an old high. So we've got all of those three in one move. So we've got a retest of the order block for our fair value gap, and we've got a sweep of an old high. So now what we would want to see is a displacement lower to form another order block where we'll get in our sell positions. So if we carry on going, so we got a close. So we got a close below the up candles. The up candles open. So we've got another order block here where price came back into it. So this close here, it closed below this up candle was open. We've got a retest of that open, and then we could enter a sell position here, put our stop loss above the mean threshold or this old high. So I'm going to choose to put it above the old high. So the stop loss is above the old high. Got the mean threshold of this up candle here, and then we could just look to target these lows down here. So we could put our take profit. Just for the video, I'll put it here, and then just carry on, see what the market does, and then we get our take profit hit. So yeah, that's that for this video. I hope that the explanation of what an order block is helps a lot. If it has helped you, please, don't be scared. Feel a bit generous. Drop a like. Subscribe to the channel so you can see more videos like this to help you if you're going through your trading journey as well. And yeah, man, help a brother out. But yeah, have a good weekend. I know I am. The sun's out where I am, so yeah, I'm gonna go enjoy that. Probably gonna go for a walk. And yeah, have a nice day.